Hello, good morning. Good morning. So I'm trying to upload the slides for today. Good morning, Mr. Roger. Good morning, Engineer Jude. Welcome, sir. Okay, I need to remove the other slides that I have here. All right.
Good morning, Edwin. Can you hear me?
Loud and clear. Good morning, Mr. Jude.
Great. So just go on with class. I will come towards the end and make an announcement towards or about the capstone project. But go on with class.
All right, sir. Thank you very much. I'm trying to upload, so I can't upload.
You can upload.
Yes,
you can
sorry.
Upload. You can click on
yeah,
comments.
You
see everybody there.
I can see, yes, I can see Mr. Raja, I can see Daniel, I can see Hanif. I can see, thank you very much for that. That was really, really helpful. Good morning, Mr. Victor. So I'm trying to upload the module 3 now because, I can't upload more than 2 slides. So I had to delete the other ones that were there to be able to upload the module 3 and 4.
Yeah, that's fine. You can delete all the slides. You can delete all the slides there, upload modules 3 and 4, and work with that. They already have the slides inside the Google Drive.
Fantastic. All right, so let's give a minute for this to upload. Okay. So could you help me project slide 1, please? Slide 1, yes. It's already uploaded. Thank you very much. All right. Good morning, everybody. My name is Okoli Edwin, and I will be running through the slides for Module 3, and then we get down to DeFi trading and also making wallet transfers. All right. So last week we did some quick run through of everything as regards blockchain, Web 1, Web 2, and even Web 3. I hope you you got value for your time. And if you didn't catch up with the class, I'd suggest you go to the YouTube and then watch all of that again. It's really, really helpful and insightful. So let's just run through this one as well. All right, so we're going to be doing decentralized exchanges. Like I told you the other time, we have SEX and we have DEX. So DEX is decentralized exchange, while SEX is centralized exchange. So we're going to be looking at the overview of DEX platform, trading on Uniswap, SushiSwap, and others. We're going to be looking at liquidity provision and earning of reward. All right, so decentralized exchanges are platforms that facilitate peer-to-peer trading of digital assets directly on the blockchain. Like we talked about, someone trying to sell his house on the blockchain, that helps for validating that transaction, without a third party. So DeFi or decentralized exchanges actually focus on financial transactions. So trying to move from one currency to another, from one peer, from one person to another. So decentralized exchanges focus on that, and they operate without any intermediary, without any person, because they have lines of codes that have been able to carry out the task that is needed of an intermediary. So like you see here, I highlighted that we have the merchant, the merchant that is trying to sell and the person that is trying to buy, right? So the smart contract is the one doing all of the task, verifying that this person has this certain amount of money in their wallet, and the person that is trying to buy also have the certain amount of money, that's going to be receiving it, So yeah, that's basically what a decentralized exchange is. All right. So these platforms prioritize decentralization, security, privacy, offering users greater control over their funds and reducing the risk of censorship. That's one thing about decentralized exchanges. You can go on any exchange, connect your wallet. They're not going to ask you for a KYC or anything. Just connect your wallet and do your swap. So one of the first decentralized exchanges was Uniswap. It was built on the Ethereum blockchain. Now it operates using automated market making algorithms. So the idea of it is to basically price these assets. So they put, I don't want to go into the nitty gritty of that, but basically the idea of an automated market making algorithm is to basically price the market. So basically you put two apples, or you put one apple and one banana. If people are taking apples more than banana, if people are swapping more apples for banana, the price of apple is going to increase. It shows that the value of that apple is needed more. The value of that apple is more than the banana. So the value of the apple will be increasing while the banana will decrease. So basically that's how, just to give a brief explanation of what an AMM is, right? So traders can provide liquidity on Uniswap and earn fees from it. So basically it's a decentralized exchange. So nobody owns it. It's owned by a community. Most of them are owned by a community of people. And so the way it works is that, when you want to make a transfer, when you want to make a trade with someone, you want to make a swap, you go to the bank, right? You go to the bank and then they do that swap for you. So the bank is the middleman that facilitates that transaction. But with decentralized exchanges, we need liquidity. Someone has to be the one providing the liquidity. And in this case, we have the what's the name now? The decentralized exchanges. People have to come in to provide liquidity for other people to trade. So the people that provide that liquidity begins to earn from the fees of the transaction. Are we getting it now? So instead of the bank providing liquidity and taking fees from the transaction, the people come in, provide liquidity into a pool of fund, and they earn from the fees of that transaction. If you're following, can I see someone say yes, we understand? Or if you're following, just type in the comment section so I can see. I'm happy that I could I can see the comment section today. I couldn't see last week. So basically, like as I was saying, the way it works is a certain set of people put their money into a pool of fund, while other people begin to use that pool of funds to make transactions. And as you're making that transactions, the transaction fee is going to those people. A portion of the transaction fee is going to the people that made it possible, that created the liquidity. So traders can provide liquidity and earn fees in return. Thank you, Abubakar. Thank you, Mr. Victor, for that confirmation. So after Uniswap was created, SushiSwap became a fork of Uniswap. SushiSwap is the same as Uniswap, but it's a fork. When you say a fork in the blockchain, it means it's a duplicate. So because Uniswap is an open code, anybody can go and create it or duplicate it. So SushiSwap went, duplicated the exchange, and named it SushiSwap, and started making money from it. So it introduces the concept of yield farming, allowing users to stake their token in liquidity pools and earn rewards in form of sushi tokens. So SushiSwap did not just fork, they introduced something called yield farming, where you can stake your token. So you don't want to put your money in a pool. You don't want to put your money in a pool. You want to just stake your money. You just want to stake that particular token. For instance, let me explain now. For you to put your money in a pool, you need to get, I use the example of bananas and apple. So for you to put your money in this pool, let's say it's a pool of fruits now, you have to get 10 bananas and 10 apples. You understand? to put it in that pool. That's how, so that anybody that wants apple will just take the apple and take and drop banana, something like that. But for staking, you don't need to have two different currencies. You don't need to have two different products. You can just take one. You just put in the apple. You just take the apple and you earn certain tokens. So in the case of SushiSwap, you stake let's say you stake Ethereum, you will earn sushi tokens. So that was the innovation they brought in at the time. Thank you, everyone. I see your comments. All right, so liquidity provision and earning rewards. Liquidity provision involves adding funds to decentralized exchanges. I've already explained this already in the last slide. So basically is you add funds, you become the liquidity provider. So instead of the banks doing all of this, we now collectively create a bank and collectively use the bank as well. That makes sense? Yes. All right, so I'll go to the next slide. Understanding liquidity pools, yield farming strategies, and staking as a passive income source. Now, yield farming, I'd already explained what it is. Yield farming is putting two currencies into a liquidity pool and earning rewards from the transactions that's going on. So you can see here we have money coming into a bag, and that bag is now the liquidity pool. Just an example, it's now the liquidity pool where people can use to make trades and transactions. Now, staking is putting your currency and saying, I want to just drop my Ethereum, I want to drop my Bitcoin, I don't want to buy any other token, I just want to drop that Bitcoin with you, and I earn rewards from it. So you can earn passive rewards from staking because you're not doing anything, you're just keeping it. So instead of buying and just holding a token, when you want to hold it for a long term, it's not as if you bought some of this pump and dump. You bought a token that you want to hold for long term. Let's say you want to hold for 1 year. You're looking to hold it for 1 year. You can easily stake it on one of these dexes and earn rewards, earn more of that token. Either you earn more of that token or you earn more of the platform's token at the end of the day. Now, we move down to NFTs and airdrops. So I'm sure some of us here received dogs. I'm sure some people here received dogs. If you did, maybe you should drop a bone. So I'm sure some of us here received dogs, right? Or if you did not receive dogs, you received this one, Notcoin. If you did not receive dogs, you received Notcoin. That's if you have been participating in some of these blockchains, airdrops, right? So airdrops are not just free money. I can see Sunny said they received dogs. All right, great. So airdrops are not free money. They are not free money. Airdrops are a marketing strategy used by blockchain projects to distribute free tokens to a targeted audience. They are not free money. Let me explain. Now, every company, I want you to go home today seeing a blockchain project as a company. Don't just see it as a crypto, like maybe Bitcoin or something. See it, or gold. Don't see it as gold. See it as a company that is trying to sell something, that is trying to market something to you. You understand what I'm saying? They're trying to market something to you. And for every company, one very big factor is marketing. For them to get the word out, a very big factor is marketing. And every company has what we call a marketing budget. I'm seeing the bones. So every company has what we call a marketing budget. So now in the normal Web2 world, you see companies do something like maybe buy one to get one free, or refer to earn certain amounts, or Black Friday. All of those things are marketing strategy. Now there are certain monies that have been kept aside for a marketing budget. All of the ads you see people putting up ads, billboards, all of that money is they pay for those things, and they pay heavily for those ads, right? The ads you see on Facebook, all of those things, they are paid for, and those money come from the marketing budget of the company. Now, in Web3, somebody said, instead of us to give our monies to these Web2 companies to promote our platform, why don't we give this money to audience, to people in Web3? Let them promote the platform for us. By the time we start sharing free money now, who doesn't like to receive free money? Everybody is going to come. Now, this is not a new strategy. PayPal, they did this as at the early stage. They were giving around $20. This was in the early 2000s, around 1999. They were giving out $20 for every sign up. Check $20 as at then. That's like, let's say, like $200 or thereabouts now. So they were giving out $20 at the time, right? So it will make people want to go to that platform. It creates an incentive for people to come on to the platform. And I will tell you something. Airdrops has been diminishing over time. The reason is this. Because as more people begin to know about these platforms and these strategies that this company use, people are flooding. The goal is already being met. Now, as at 2020, 2019, you can receive airdrops worth of thousands of dollars, $10,000, $50,000. I know people that received over 200K worth of airdrops on Solana ecosystem. Yes, right. But right now, you see that most of the airdrops are like $50, $100. If it's a very big project, you see that maybe the airdrop can be like maybe like $100 or $200. That's, if you do more, you can get like 1 million or thereabout, So the reason is because, for instance, they cannot give out, let's say they have 500,000 people. Maybe they were budgeting to, their marketing budget was like, let's say, ₦1 million. And they said, okay, let's do this advert. Come in and my mic dropped. Okay, so come in and you begin to earn, certain points. And they were targeting, let's say, they're like, okay, if we get 100 people, we'll share maybe 10,000 naira for them, 10,000 naira for 100 people. That is, that's 1 million, right? Okay. Now, based on ripple effect, based on the fact that they said they were going to give out free money, they now got 1 million people signed up. The case is they cannot increase their marketing budget. They would only reduce the allocations or the money that will be given to the people. That means they would be giving out 1,000 naira to 1 million people. So you understand the way this works. And because the ecosystem is growing fast, more people are coming in daily. I walk on the street and I see people that do not know anything about crypto. They are always farming hamster or Blum, right? So my advice is, if you want to take airdrops seriously, take them seriously now, because as time goes on, it's going to diminish. So bag all you can and do all the farmings that you can. So let's move on. Introduction to non-fungible tokens. Non-fungible tokens, NFTs. NFTs are unique digital assets that cannot be replicated or replaced with something else. NFTs had their boom, right? And I believe that NFTs are going to come back, but they're going to come back in a different and a more useful light. Now, I talked about, in our last class, we talked about how somebody could buy a house on the blockchain and they get some form of certificate to verify that purchase, right? And for that, NFT comes in very, very handy. Very, very handy. NFTs can act as a non-fungible token. They can act as because they are non-fungible, means they are irreplaceable. You can't change them. So once it has been minted on the blockchain, you cannot change it and you cannot replace it. So each NFT has a distinct value and identity, making it different from different tokens. So you can look at this. Most of this is a punk NFT, and the other one is also a punk NFT. You see that they are slightly different. And aside the picture itself being different, their codes behind it are actually very, very different as well. So that's what NFTs are. You can use them for proof of verification of different contracts and different purchase. Now, NFT trading and investment consideration. Now, as of 2021, if I'm not mistaken, we had the NFT boom where people were flipping different arts, buying and selling different artworks as NFTs. You see people go and snap a man that was playing the talking drum. That one trended in Nigeria. A guy took a picture of a man that was playing the talking drum and sold it on the Ethereum blockchain for a very good amount of money. So people started selling different type of things. So you can buy an NFT from a good and known artist that is popular, and in the future it can be sold for a higher price. So just imagine buying the artwork of Leonardo da Vinci on the blockchain and then selling it later for a much higher price. I think last year Donald Trump sold his NFTs. I think he took out some of his clothes. He tore his clothes. It was very funny, but he tore his clothes and then I think he minted it on the blockchain somehow and sold it for a good amount of money. Use it to raise funds, So you can think about that if you want to engage in NFTs trading. Now, so we are going to be practicing trading on a DEX. So we're going to practice that. Mr. Aliyu, I'm trying to use my phone to sign up my phone to this call so that I can share my screen on my phone. Could you help me with that, please? It just keeps loading. Okay, so I'll be going over some of the comments so that I can just respond to that while we're trying to get my phone signed up. Okay, so how to locate demo trading in BitGet on the Android. Okay, what is being done in particular, or is it just signing up? So for the airdrops, you don't just sign up. It depends solely on the platform. There are some platforms like Akam that give out, I think, $1,000 to some of his users for just signing up and dropping their emails. Many of the Solana airdrops then was just sign up and drop your emails and drop your wallet address and you will receive token, right? Okay, I think. All right. How do I share my screen now? Could you allow me share my screen, please? So I can share my screen from my mobile and then everybody's going to see. I want us to have a quick practical of trading and also sending out cryptocurrencies on wallets. Those are the basic, that's where we need to touch on today and wrap up.
Yes, sir. Just click present on your phone.
I should click what?
Present.
I can't see that here. I can't see present on the phone. It's
Okay,
not.
just check your WhatsApp. Just check your WhatsApp.
All right, great. All right. Thank you. Okay. Okay, so let me be answering some of these questions that you have. Okay. So like I said, the platforms can require you to do certain things, can require you to do some of them can say invite people to the platform, invite someone to their project, tell someone about it, and earn rewards, something like that. It depends on the platform and what they are trying to achieve. So that's that. It's good that many of you received airdrops for dogs. That's very interesting to see. So somebody said Amstar is launching with 100 billion coins. Binance is adding 3%, which is 13 billion coins, and they have more than 55 million players. So it depends on the pricing of the token. This is the total supply, if I'm not mistaken. I do not know that number offhand, but it depends on the pricing, the liquidity that they put in, and then the price for the token. Please check your WhatsApp, Mr. Awa. Okay. So they are launching with 100 billion. Yeah, that's the price for that's the total supply. Yes. So, and they have 55 million players. The question now would now be, how many percent of their tokens are they airdropping to their users? Is it 30%? Is it 50%? And now the next thing will now be, are they converting your hamster tokens, the ones you've made, directly like, are they converting it to their tokens that they are launching, or it is maybe it's a point that you can actually convert? You understand? Like, for instance, if you do X plus converts, I think 1,000 X plus for 10 VX, for 10 VX. So the VX is the one you can actually trade to actually earn money. You understand? So it depends on the platform and the strategy they employ. Yeah. Thank you very much, Mr. Christopher. Somebody said, what is the difference between voucher and NFTs? Good. That's a very good question. Now, vouchers are not on the blockchain. Vouchers are not really on the blockchain, right? But NFTs are on the blockchain. NFTs are, okay, let me try it again. All right. NFTs are what you could use to verify their tokens, or their images. We call them tokens. Sometimes they are images that are non-fungible. It means that there is no one like it. For instance, you are an NFT. I am an NFT. I am non-fungible. Yeah. Should I try it again? Hello? It's still the same thing. We need this to come up so that we could I want to use my mobile. I don't want to use my laptop because many of you trade on Mobile. I believe many of us trade on mobile, right? What influences the price of a token when launched? One of the biggest things that influence the price of a token when it's launched is the supply. The supply. How many people has it? For instance, a token launch and they did not do any airdrop. It means that only the investors in that project have some set of that token, or people that bought into the pre-sale if they did one, right? So that means, let's say we have there, it's 100 million tokens, but only 5% is in circulation, for instance. That token would likely not go down in price. Let's say it was priced at $100 per token, for instance. That token would slightly or likely not go down in price. It will first of all go up in price because people will try to buy it. And as you're trying to buy it, like I told you, the AMM would increase the price of the token. It will go up in price. Do you understand? But if that token had launched, for instance, and they have already dropped 50% of the token to people that are doing that airdrop because of the money, what will happen is immediately they come on and they can be able to sell off that token to earn fiat. They would immediately do that. They would immediately dump the token and collect fiat. And I told you on the AMM, it will check to see which one is being needed the more, and it will increase the value of that one. So when you are swapping, when people come on, for instance, and begin to swap Notcoin from Notcoin to either dollars to USDT, you see that Notcoin is going to reduce in price drastically because there is heavy sell pressure. So that's that. That's what determines the price of a token. Okay. Sally, so I'd like you to complete your question. When a coin have total supply of 100 million tokens and burn 10,000 each quarter of the year, which is part of their burning as part of the coins at people's hand? I don't really understand. Could you please restructure your question so I better understand what you're asking? Is someone asking about metaverse? Metaverse will come, they will come, but not now. We've seen different different people trying to build on the metaverse. It's actually, we have projects that are actually actively building for the metaverse. The time is not yet right, it's not yet ready. Okay. So guys, you can keep dropping your questions if you have any question while we're waiting for the technical team to be able to bring up my phone. Okay, let me just run through slide 2 that we have for today so that I know that we are done with the slides, and then we go straight into the trading and also swaps of tokens. Mr. Issa, please help me put up slide 2, please. Thank you very much. All right, so we're going to be looking at mining and risk management, overview of mining processes, mining hardware and software, evaluating the profitability of mining. So mining is cryptocurrency mining, right? You know, we have other types of mining. We have gold mining, we have bronze and all of that. So cryptocurrency mining is the process of validating and adding transactions to the blockchain ledger. Miners use computational power to solve complex mathematical puzzles, which verifies transaction and secures the network. Successful miners are rewarded with newly minted cryptocurrencies and transaction fees. So mining is like trying to keep records on the blockchain, is a way to keep records on the blockchain. So we have hardware and software mining tools. Now for hardware, we have something called the ASIC. It is the application specific integrated circuit. We have the GPUs, graphic processing unit. It is used for cryptocurrency mining. Now the ASIC are designed specifically for mining certain cryptocurrencies and offer high efficiency and performance. Now, this is for those that want to go into mining as a business. It's very expensive, but if you are looking to do that, you'll be looking to get either one of these mining hardwares. Now, GPUs, they can mine different cryptocurrencies. They can mine different cryptocurrencies because they have crazy computational power. So why ASIC is for mining a certain specific cryptocurrencies. Now we have mining software interfaces. There are interfaces with mining hardwares, mining software interfaces with mining hardwares and blockchain networks. So they are the softwares that you need for mining on these networks. So it manages the mining process, including connecting to the mining pool, performing hash calculations, and submitting solution to the network. Importance of risk management in crypto trading, hedging strategies, insurance, and also security measures. Now, cryptocurrency trading involves volatility and risks due to unpredictable nature of digital assets. So when you're trading cryptocurrencies, we see that if you look at this pictorial example I put here, you see that the price went up here. First we had 2 green candles, then we had 3 red candles, and up and down like that. So you can come in and say you want to trade cryptocurrencies and you want to be a trader and all of that, but there are risks involved, and the risk is the volatility. And it is from that volatility that you can profit because it is fast. Cryptocurrencies can move 10% in a day. That's crazy. Because in the stock market, if you see 1% movement in a day, that's a lot of money, right? But because cryptocurrencies are still we are still in the early phase, I'll tell you, we are still in the early stages of cryptocurrencies. And so we have some of these tokens, they are easily tradable, it's easy for them to run 20%, 30% up, right? So that brings about volatility in the market. Now we also have effective risk management helps traders to protect their capital and minimize losses during market fluctuation. So effective risk management involves setting stop loss, monitoring the chart, monitoring the news, knowing when the market is going up or down, right? Just give me a minute. Let me turn on this light. Okay. Somebody was asking a question. What about all this tap swap? It's tap people have been doing. Are they mining as well? You can sometimes, it depends on the project. It depends on the project and what they are trying to achieve. They can tell you, some of them can tell you are mining, but really you are just engaging. The word mining is just to bring people in. You are basically mining though, because as you are engaging, you are creating tokens, for yourself. So you're basically mining for yourself as an activity you are doing for them. They determine the type of activity you are doing to receive that token, that mining rewards. So yeah, you can consider that as mining. Still yet not working. Okay. So strategies such as diversification, setting stop loss orders, managing leverage, and are essential for managing risk in cryptocurrency trading. So if you want to trade cryptocurrencies, let's say on an exchange like BitGet, Bybit, and all of the rest, you can sorry, okay, my mic was, let me turn this off. All right. So you need to use certain strategies, certain tools. For instance, using the stop loss order and managing leverage, because these cryptocurrencies trading platform like BitGet can give you the ability to trade with 10x your money, 100x your money, so that you can make more profit. But the way you can make more profit is the same way you can lose all that money. All right. So we also have hedging strategies. That's another strategy that you can employ to help you when you're trading. Hedging is a risk management strategy that involves offsetting potential losses in one asset by taking opposite positions to correlated assets. Common hedging strategies in DeFi include using options, futures contracts, and stable coins to hedge against price fluctuation of volatility. Hedging allows traders to protect their portfolio from adverse market movements while maintaining exposure to potential gain. Now, I will explain what this is. This hedging is, you have to be very, very smart. Wait, somebody said they can't hear me. Please, if you can hear me, drop a comment so that I would confirm that I'm being heard. If you can hear me, please do well to drop a comment. If you can hear me, please drop a comment. Thank you. Thank you, Ibrahim. Thank you very much, Ibrahim. Great. All right. Mr. Victor said you can hear me. All right. So I will just continue. Now, trading using hedging strategies is very, very tricky. Now, the thing is, you bought Ethereum on spot. You bought Ethereum on spot. So if you can't hear me, you could just log out and log in quickly to, maybe it's your network or something. All right. So you bought Ethereum on spot, right? And you see that you've marked up your chart and you see that Ethereum is going to go down. It's going to go down in price, but you don't want to sell off the Ethereum you are holding because you are holding for long term. Now you can come into a platform like BitGet and go to the futures part and put a leverage and sell that trade on that particular platform. Now you're going to earn. When I mean sell that trade, I mean you go into a futures contract and make a trade, betting on the currency to go down in price. You understand? And now that currency goes down in price. Let's say you can see buy and sell here. Let's say around this place, the sell part, you sold the tokens, right? Meanwhile, you are still holding them. You know that the one you are holding is going down in price. That's fine. But you use another money to do futures trading and sell that token and bet on it to go down. Let me use that word to better make you understand. So you bet on the tokens to reduce in price. Now you earn, let's say you put $1,000 and then you put $100 and then you do maybe 10x and then you earn maybe $200 or $300 from that trade. You can now use that money when it comes down to a certain level, you know that it's supposed to buy back. You can now use the profit you have made from selling to buy again, whereby you are increasing the number of tokens you have in your hand and also increasing the value of that token. That is what hedging is. Insurance and security measures. Cryptocurrencies trading involves high volatility and risks due to the unpredictable nature of digital assets. So these strategies, these security measures, they help to help to ensure that you don't lose all your money in that cryptocurrency. Now, understanding legal aspects of DeFi and cryptocurrency trading, the regulatory landscape. You know that we've seen that over time, regulatory landscapes has been amazing in the country, right? We've seen cryptocurrencies being banned in certain parts of the government parastatals, and in other certain parts, it has been accepted with open arms, right? We understand that the government is still trying, different segments are still trying to understand and find a way of making this a good technology that is healthy and ethical for their parastatals, right? So one of the regulatory landscape that is being put, one of the ways these platforms try to regulate anti-money laundering is by doing know your customer, by doing KYC. I know many of us will know what KYC is. So KYC is the company or the project. I like to call them companies because I mean that's what they are. The projects try to understand who this customer is, try to get your credentials, your details, and also try to do follow the anti-money laundering regulations. So now this is being put in place by the government of a particular geography. Let's say, for instance, for you to trade in the US, for you to do DeFi in the US, there are certain regulatory rules you must follow to be able to do that. Now, another kind of this is security tokens offerings, right? Tokenized representation of traditional investments that comply with existing security regulations. So another type of regulatory landscape is security tokens. So security tokens, they actually try as much as possible to follow the regulatory landscape, complying with the security regulations of that country. Now, for instance, for you to sell tokenized representation of any assets, you need to, in the US, you need to follow the US regulation. There are certain licensing you need to have. FINRA is one of them. There are so many licensing you need to have to be able to sell or buy any of these, to sell this project, this digital assets, right? Now, we've also seen government trying to issue out CBDCs. We saw our government issue out the e-Naira. I know that they are putting a reform to it to make it better. CBDCs are central bank currencies on the blockchain. You see the adoption is going wild now. Just like we have e-Naira. E-Naira was the Naira on the blockchain. And we are believing that they are going to come out strong and better so that we can all transact on the blockchain. Now, lesson 9, it's a final project and future trends. So we are doing collaborative projects, developing of DeFi strategies, and exploration of the upcoming trends in Web3. Now, what will be your DeFi strategy? What will be your DeFi strategy? We've talked about DeFi and all of the things that you can do with DeFi. What are you going to be doing? That is why I put up these different platforms here. Which one are you going to be using? Are you going to be borrowing and lending cryptocurrencies? I want to see that. I want to see some of you drop that in the comments if you've actually decided what you want to do. Are you going to be trading cryptocurrencies? Are you going to be staking, or are you going to be investing in decentralized projects like a venture capital? Are you going to be doing airdrops? I know many people is going to fall under the airdrop category because we like free money. But I mean, the good thing about this is that you can go from one strategy to another. You can start with airdrops to help you build liquidity, and then from there you can go into trading. So Abubakar says he's going to be doing trading. That's fantastic. I'm sure you know how to trade, right? So you can go from airdrops to trading. You can go from trading when you've built up more liquidity to now start borrowing and lending, right? You can go, and then from there you can start earning, start staking, and start investing in decentralized projects as a VC, which is kind of like where the biggest money is, to be honest, right? So you can do many things, but these are the list of things you can do, right? Trading also talks about trading cryptocurrencies and all of that. So trading cryptocurrencies and NFTs. So you can do from, if you don't have money, right? Don't be discouraged. You can say, okay, I want to do airdrops, and you buy into you participate in an airdrop, and you get the airdrop. Let's say you get $500, $100, $50, no matter the amount, and then you take that money, you can invest it into a cryptocurrency that you are sure that is going to do good, and then when that one does maybe 5x or 10x, your money has now, your $50 is now $500. Good. Now you can look for another one. Do that. Just keep compounding and building, right? You get to a certain stage, you can take out a certain portion of the money instead of putting it back in the bank, letting it stay there without earning profit. You can put it into a platform that you can that's going to be, you can borrow it on a platform. People are going to be coming there to borrow your money to use it to do different things, and you're going to earn fees from it. And then from there you can just build up your portfolio and become a crypto and DeFi OG. Wow. So we have upcoming trends in Web3. All right. So what of the upcoming trends in Web3? I want to see you guys talking about. You can drop in the comment section some of the trends you think are going to come up in Web3 in the future. I know we already have them in our slides here, but let me even move back, Seth. All right. So we're going to be talking about, just drop me some of the some ideas you've heard, some things you've heard of, although you've not started seeing them now, but you know that this thing, somebody has been saying this trend, or you know that this trend is going to be big in the future. It's going to be interesting. It's going to be massive, right? We already have them here, so I'll just run through them as quick as possible. We have deepin. Now, deepin means decentralized infrastructure, decentralized physical infrastructure. Now, if Uber was on the blockchain, Uber will be a deepin project. Now, there are some deepin projects that have their ongoing airdrop activities that you can interact with. For you to do this, for you to search about them, you can just go on Twitter and put hashtag deepin, hashtag WRA. This is an alpha for doing research. I just give you an alpha for doing research. Now, if you put out this on Twitter, you're going to see different people posting about different projects, right? And now you can now go there to research on those projects. Look at them, read what they're about, and if you are moved, if you think it's something that you like, you can also share it to your friends or to other people in the crypto ecosystem. Let everybody do their own research, and then when you guys are satisfied, you can participate in the airdrop or even look to investing in the project, right? So we have deepin, we have reward assets, which is the trading of bonds and real life products on the blockchain. On the blockchain. Now you can, for instance, we can sell real estate on the blockchain. We can sell cars on the blockchain. We can sell houses, stuff like that on the blockchain. These are the upcoming trends. These are the trends that are going to drive the next wave of the bull run. These trends you are seeing here, deepening reward assets and AI on the blockchain, is what is going to drive the next trend. This is an alpha for you. So an alpha means a top information that can help you make money, most likely, right? So these three projects, if you start now to start researching on reward asset projects that you can invest in or you can participate in their airdrop, it's going to help you get some of these retroactive airdrops. And these projects, people are not really focusing on them now. So if you start focusing on them, doing them, you would be making so much money from them, right? This is not a financial advice, but this is something I think you should look into. Deepening reward assets and AI on the blockchain. Now we've come to the workshop part of this, where you're going to do we're supposed to do trading trading analysis, trading on DeFi, and also trading, making transactions on the blockchain. I probably would just have to send this money from, I think we just have to do this transaction here on this PC, since it's not coming up yet. Oh, okay. So we are getting an update from the technical team. We cannot share our screen on the StreamYard. So what I'm going to do is to try to show you the process on my mobile here. I have my mobile phone here. I'm going to try to show you the process, if that's going to work. Or, let me just see if I can share my screen here, and we'll just do that from here. Okay, some of you say you're going to be doing trading, cryptocurrencies, airdrop, investing. Great. Jenny, I love that. Investing, trading, staking, investing. Those are very good ways to be involved in the DeFi and crypto ecosystem. So I'm going to share my screen now. I'm sharing my entire screen so that you can be able to see exactly. Great. Okay. So let's open up Uniswap. Please let me know if you can see this extension here. Can you see this extension? Let me see. Yes, you can see the extension. That's great. All right, cool. So this is Uniswap. Uniswap is a like I said, it was one of the first decentralized exchanges on Ethereum. You can see swap, earn, and build on the leading decentralized crypto trading protocol. I'm gonna launch app now. Let me see if I have some money. So I have to stop sharing my screen now. First, let me try to log into this. Just give me a minute. I'm trying to log into my my wallet on my laptop. Ah, it's taking a while. Okay, good. We're in now. All right. So I have, okay, good. I'm going to be using this wallet. Let me share my screen now so you can see. How can I connect my mobile to PC? How do you mean? I don't think you can connect your mobile to PC. So this is Uniswap's trading platform. You see the way it is now is basically how it is on the mobile app. There's no much difference. There's no much difference at all. It's just the same way. So it's basically this small part on the mobile app. So since we cannot put up the share screen on this phone, we're going to use this platform to do this quickly, very fast. So and then I want somebody, if you have an Ethereum address, to drop your address. I'm going to send somebody a token from my so the first person to drop is Ethereum address on Base. I'm going to send you a token right now to confirm the swap. So we're going to be doing two things. One is swapping tokens. The second one is sending tokens, sending cryptocurrencies on the blockchain. So those are the two works we have today. Those are the two workshops we have today. So now this is the platform. I need to connect my wallet to get started. Just like I told you, there is no what's the word now? There is no regulation. You just come in, click connect wallet here. You can see this now. And I have multiple wallets here, but I'm going to be connecting this one. Right? Click connect. Now it has been connected. So I'm going to select the token I want to swap. You can see here I have base ETH and I have some money there. I have some money on, these are different blockchain networks. Sorry. So I'm going to be swapping base. I'm going to be swapping Ethereum. Let's leave it at that. I'm going to be swapping Ethereum for, what do we go for now? I'm going to be swapping Ethereum for USDC. Okay. So I have 0.00. Let's do 0.001. So that's $2, $2.6. Are we following? So $2.36 is 0.001. So 0.005 could be $1. Yeah. So $1. Okay. So you can see basically this is the AMM. So the more you're swapping, if everybody comes here now to swap more Ethereum for USDC, they are going to be the AMM, automated market maker, is going to classify Ethereum as a product that has more value. So it's going to be increasing the product's value, the price, in respect to the demand that is coming in, so that at the end of the day, Ethereum will not finish in this same pool. So that's the way AMM works. Now I'm going to be swapping for one. I'm going to be swapping from Ethereum to USDC, which is fiat. I've put the amount of token I want to swap, 0.001 Ethereum, which is about, that's 0. Okay, that's That is $0.2, not even $2. All right, cool. Let's do, okay, 0.001 is $2. So let's do that. You can see you can even swap lower than $2, you know, I mean. So it will now give you a review of the swap. You are selling this to get this, right? And this is the rate. This is the rate, and this is the routing, which is from Ethereum then to a pool, and then you get this. Now, the way cryptocurrency has become advanced to a point whereby even if they don't have a pool for this, they can connect it to other pools. So you see the routing, then you see that it's going from Ethereum to another pool, and then to you now get the USDC. All of this is happening on Base. You can see that the fee is 0.25%, which is way under 1 cent. Network cost is also very low. So now you click swap, confirm swap. It will now bring up my wallet, tell me to confirm it in my wallet that I want to swap this money. You can see that now. So my wallet is now going to tell me, oh, somebody is trying to make a transaction. Oh, is it you? Are you converting from, can we see this now? Are you converting from Base to USDC, right? And I will say confirm. So it will take some time, but you see now, this is very fast. So this swap has been done and submitted. Now, if I go to the wallet, remember in the wallet we had, I think we had around $3 for the Ethereum. So now let's check and see how many we have remaining there. All right. So you can see that $2 we swapped. Look at it here now. You see. And now I'm just going to quickly show you something. You know, we said the blockchain cannot be, once a transaction is done, it cannot be altered. So now this is the transaction that has been done. I sent my Base and I sent my Ethereum on Base and I received USDC. Now, you can see everything is written out here. I sent it from this wallet address, interacted with this wallet address, and all of that. Now the network is Base. Now, if I want to confirm this transaction, I can come here, click on this transaction hash, and you go and see the back end. So we are going into the back end to see what really went on, to see that the money is actually in the wallet. So this is Base scan. Now, for every blockchain, they have their own scan. So you can use that to confirm the transaction. You can see this is the Base scan, a product of Etherscan. You see now the transaction hash here, the status, you see the confirmed block. So this is the block that this transaction was saved in. All right. I'm just trying to quickly show you that this is the block that this transaction was saved in, right? And this is the whole routing of the transaction. You see that everything is verifiable here. Now, if I go to Etherscan, right, you see that this has been saved in a block. We cannot see it here, but you see that this is basically all that is going on the Base network, So you see the latest transaction, latest L1 to L2 transaction, latest block. So our block is supposed to be in between one of these here, right? You see, in the last 2 seconds, you see. So as this is what is happening, people trading and doing different transactions on the blockchain in real time. Everything is being saved in a block. And as it's saving, you cannot go and change what has been saved. You see now, you cannot go and change what has been saved. You can see that everything is showing here in real time. So I just wanted to add that in as a bonus. Right. So we have our money in our USDC wallet. All right, great. So I think I I have the first person that dropped his wallet is, we can all see it, so there's no cheating here. So MS is the first person that dropped this wallet. Please confirm if this is a base wallet. Okay. Somebody asked the question, is there a difference between USDC and USDT? Now, USDC and USDT are both dollar-backed tokens. So they are tokens that are pegged to the dollar. It means they represent the dollar on the blockchain. They help us to transact on the blockchain. Now, the difference between them is that they are just owned by two different companies. USDT is owned by Tether, while USDC is owned by Shaco. So these are just two different companies. That's the difference. So we have MS. I believe this is a Ethereum wallet. This is a base wallet. If it is not, we'll be sending this money to the wrong address on real time. So if this is not a base USDC address, we're going to be sending, my screen is not clear. Oh, okay. We're going to be sending this to a wrong address in real time. So I'm going to be sending the $2 that was converted on USDC to USDC. I'm going to be sending that to MS. It's confirming if base, but EVM. Yeah, EVM means Ethereum virtual machine. I do not understand what you're trying to ask. That is your Ethereum wallet address. So we are right here in this class performing a real-time transfer from my wallet, my Ethereum wallet. We've already done a swap from Ethereum to USDC. Now, if you wanted to do a transfer to Naira, you can send it to an exchange like BitGet and all of that, and then there are platforms for trading to Naira. But we're talking about on the blockchain right now. We want to run a swap from Ethereum. Great, thank you for that confirmation. We've done a swap from Ethereum to USDC, and now we are going to be converting from USDC to we're going to be sending USDC to MS. So MS, you'd have to confirm to us that you have seen this. You confirm the transaction. Okay. All right. Okay. All right. So what I'm going to do is, for the benefit of everyone that is here, because we cannot see MS screen, I'm going to save this wallet address. I'm going to save it, but I'm not going to send it to this wallet address now so that everybody can see it. I'm going to send it to another wallet address of mine so that we can all observe what is going on. Right. I'm going to send it to another wallet address. MS, don't worry. I've saved your wallet address. Okay, so what wallet should we use for this now? So I'm opening up another wallet address. I remember the password for this one. All right, let me do that on my phone. I have it logged in on my phone. So I'm going to open up another wallet address now, where I'm going to copy another wallet address and send USDC there. So I'm using the OKX platform. I don't know if you can see this. So this is the OKX platform. OKX wallet. Right. So you can see on this wallet, I don't really have, let me see. Okay. So you can see on this wallet, there is zero balance. There is zero balance. You can see that for the USDC. So I'm going to be copying this address now and sending the USDC here. And so that we can confirm it. I've copied the address now. I'm going to just paste it into my Mac, and then we are all going to transfer together. Let me switch from this page to another one. So this is the swap that was done. We now have our USDC in our wallet. We now have our USDC in our wallet. This is the USDC here, right? So now we are going to be sending this USDC to another wallet on my phone. MS, your details is saved here, don't worry. I need to confirm. Now I copied this from my laptop, from my phone, and then it's now on my laptop. Yeah, it's the same address. All right, so I'm just going to proceed. I'm going to send 2 USDC to this address. I'm sending 2 USDC to the address on my phone. So let's look at it real time. The transaction fee is very minimal. You can see it's $0.0008 dollars. So I've confirmed it. You can see it's sending. You can see it's sending here. I can easily cancel it or speed up. Now we have on, you see, it has reflected here. Can we see it now? Now it has reflected here. So that is the easiest way, or the simple way to do that's how to make a transfer from your wallet, a peer-to-peer transfer. You can see that there's no bank confirming this. It is myself and you guys, everyone here, that we did this together. So you made a swap today and a transfer together. Now I'm going to be transferring this right here to MS. If I refresh this now, you see that it's gone because the money has already reflected here. So let me just refresh this. You see, it's gone. So no. Okay. So I'm going to send, just to wrap up this class, I'm going to send MS. He's from here, the $2 from here. I'll copy this and I should be able to paste that here. Yeah. So I'm sending $2 again from my wallet, the one I sent here, now to MS wallet. Confirming that now. And the transaction has been submitted. And it's about to go spending.
Hello?
And
Can
the
you hear
wallet
me?
has left. Yes, I can hear you, please.
Yeah, it's already time, so you have to round up.
Yeah, I'm done already. I'm done. Thank you very much. I'm done.
Right.
All right. So I would, yes. Okay. So I've sent that now. Thank you very much, everyone. Thank you very much. Thank you for your time. I really hope that you've gotten so much value for your time, and that you go on to start making transactions and start, utilizing this technology that is available onto us. All right. MS, congratulations on the $2, and I'll see you guys in the next one.